everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we formulate an attack plan for tomorrow's trading with, as much information as we can get out of the markets. Now, tomorrow's trading is going to be the 28th, finally pushing in towards the end of a relatively slow week. The movement this week was... oh man, what's the best way to put it in the nicest of terms? Lackluster, I suppose, would be the best way to put it. There's been a lot of movement going into the afternoon session, but yeah, that really seems to be about it. So very slow day once again. For the most part, really didn't get a whole lot done, except as we started pushing in the afternoon session. Obviously, the S&P had quite the party going into the afternoon, but the morning sessions have been really quiet, so requires a lot of patience before you start jumping on board some trades. Now, as always, let's make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list that you'll be notified every time one of these videos comes out. Along with that, in the newsletter, we talk about all kinds of different stuff. Stocks, cryptocurrencies, futures, options, forex, you name it, it's going to be in there at some point. So it's a great way to get your hands on some potential information that we may be looking for going forward. Of course, if you haven't done so already, make sure to click on the live trade room subscription and trial info and sign up for a one-day trial with us. That way you can sit down in the live trade room with us, you can see our screens, you can see the trades that we're taking, you can hang out with the members and just see everything that's going on. It's a great way to hang out with us and see if we're a good fit for what you're looking for. Of course, you can always ask questions, and it's just a really cool way to see what we're all about. Now, if you do enjoy it, you can sign up for a weekly or monthly subscription to that, and if you really enjoy it and you decide to join as a full-fledged VIP member, you get the live trade room as part of the package deal. Now, taking a look at the euro, for the most part, really bearish. Lots of chop and slop, though. We can see there wasn't really any consecutive movement until the very end of the trend, and that just led into a correction back up. So for the most part, I mean, bearish, but there hasn't been a lot of consecutive moves, and that's really what the market has been lacking lately, is that consecutive movement. We're not getting back-to-back bear moves unless it's at the end of the trend, and then we start thinking reversal anyway. Now, we did have a very nice-looking bear trend overall, and everything is looking nice and solid to the downside, but the sellers seem to be a little bit exhausted. We haven't blown through the bottom to show any signs of pure exhaustion by any means, but we are showing that they are holding the lows. They ground the lows for a good hour or so, and then decided to start rallying back up towards the highs without really any continuation down at all afterward. So really that tells us one big thing. Sellers are obviously not interested in doing anything but selling low. They don't want to sell, selling high. They don't want to sell low because there's just no room for the trade to work. There's no room for the trade to actually move to get to a profit target. So because of that, they're going to be trying to sell at better prices. The first area of big interest is going to be at 17,255. And if we can get around that area for a potential sell, we may have our hands on a pretty good sell move back to the lows. If we fail to get up that far, though, we may just rally, kind of ping off of this last week's high and just kind of duel that level. That is also the previous lows inside there, and it does make sense to find a lot of resistance in there, but I would really love to see that 17,255 hit before it starts pushing back to the lows. Now, if we do get a little bit further on the correction, 17,440 is the next area above, looking for continuation for the sellers to jump back in and push the market back down. But at this point in time, we know that the sellers don't want it at low. We have to be careful selling too low because, well, we're probably not going to get much follow through. So waiting for better prices is definitely on the list of things that we need to be doing right now. And it's better to sit on the sidelines until we get those better prices. Over on gold, for the most part, we started off the day with a range, and even the breakdown that we've had was really nothing more than just a huge range deviation. Now, what I mean by that is the overall movement that we've seen so far, the original range was put in fairly obvious between 63.5 down to 61.1, and when it broke down, you take that range and you deviate it lower, right? You copy-paste that range lower, you do it again, so this is your first deviation down, second deviation down, a beautiful bounce there. Third deviation down, that was the low of the day. So the fact that we're still cycling inside of these ranges, even if they did get a big old breakout to the downside at a little after 10 o'clock, they really didn't manage to get out of the range sentiment. They just widened it out a little bit. They went down 2 deviations and then popped right back up again. Now, in terms of upside objectives, since we are looking to buy low, sell high, we're kind of coming off of that middle deviation range low, and we're getting stuck there, right? We cycled off of the highs, worked out nicely there. Now we're kind of pinned at this area, just around that deviation bottom. And the fact that this is the earlier area of resistance turned to support several times, we're back again. That 1258 area is a big area of potential interest for bouncing to attempt that 61.1 again. Now, if we do start cycling lower, we do obviously have a massive cluster of support in here. We have weekly support, monthly support, we have 60-minute support at 55.7, we have weekly support again, everything kind of getting jam-packed into one little box here, and that really allows for a big bounce move if we do go down there for a potential rally back to the upside. Now, for the sell side, right, keeping an eye on both sides of the coin, if we do rally higher, we are looking for a lot of resistance to begin coming in at 62.6 on up to the original range high at 63.5. And if this does start breaking out higher, you're looking to do the exact same thing. Take these same ranges and deviate them up instead. And those are going to be likely profit objectives as the market continues higher in that type of scenario. Overall, though, it's a range, lots of ranges, in fact, and we know what to do with those. Buy low, sell high. Stay out of the middle. On crude oil, pretty good movement overall, mostly a wedge, obviously, and not really a whole lot being able to get done in terms of movement, but we are closing fairly high into the move, and chances are the buyers are still, you know, kind of showing a little bit of legwork here to the upside. The one big thing that's really standing out is this transition into a range that we're getting. The market participants that are on the buy side are obviously getting a little bit exhausted here, so given that exhaustion, we have to be really careful buying too high into the move. Right now, you're buying pretty much into the highs of the short-term range that we have forming. Much better off waiting for another correction down, finding support down here at the range lows, rising support, horizontal support at 48.94 was beautiful resistance across the board, and they finally broke up. Now we have a level of support there that we can use. If it does decide to pull down a little further, 48.75 and then 48.46 if they really want to give us a gift to be buyers off of as well. But really, we're just looking to buy pullbacks. We don't want to buy too high. We're going with the overall bullish trend. It's very obviously going up. So selling, not really on my list of things to do right now when it comes to crude. Really just looking to buy, and I want to buy those pullbacks, and the first pullback area is that 48.94. And then finally on the S&P, we started off the day, and most of the day really was just absolutely abysmal movement. We just weren't getting anything going. Cycling off of the range low to the high, to the low, to the high, to the low, to the high. Monotony for most of the morning. The high, 24.79 and 3/4 of the range low, 24.77 even. Looks pretty good to kind of hold that range together. We did get a drastic breakout here going in towards around, 1 o'clock. And good follow through all the way until almost 2 before we started taking a lot of it back. Now we have taken a lot of that bear move back, sporting a huge area of resistance for sellers. It's the last line of defense for the sellers to come in, and that's going to be 24.74 and 3/4. If they are not able to hold that level, then we could easily see this pop right back up to new highs and continue on its merry way to the upside. For now, though, well, the sellers obviously wanted it. Where did they go, right? And that's kind of the problem that we're running into, is if the sellers were so extremely aggressive, why did they dry up so much around that 24.58? So that becomes a point of interest. If we do see the market return back to those lows, that was kind of the turning point where the market just skipped off of it and popped right back the other direction. So if we can come back down to that 24.58, 58.25, somewhere around there, it'd be a very interesting place to see what the market wants to do. Otherwise, though, looking for selling opportunities off of 24.74 and 3/4, and if that begins to crack, then we're looking for that to turn into support to rally the market back up again. So that's the outlook. Now, taking a look at the news for tomorrow, we do have some stuff, namely 2 things. At 8:30, we have the GDP coming out for Canada and the U.S. session, both at 8:30. The GDP for the U.S. is quarter over quarter for Q2, forecasted at 2.6%. The previous was 1.4% For Canada, they're forecasted at 0.2% for month-over-month for May. Previous was also 0.2%. So not really a whole lot of news to keep the markets really going. And for the most part, we're going into Friday. The weather is pretty good across the board. We may have an early in, early out kind of scenario. And given the week so far being so drastically slow, other than the afternoon, we may just have to play it really safe tomorrow. So as always, like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, have a good one.